What is up, boys and girls? Logan here again today, and we're going to talk about a little risque topic today, which is playing Tesla put credit spreads. So I've been wanting to make this video for a while, but I really have not played Tesla credit spreads before until the last couple of weeks. So I've been messing with them, different strikes, and it's been a really interesting week as Tesla's been down 6% on the week, as you guys can see here. So before we hop into this video, make sure you leave a like down below, subscribe, and I have a really cool announcement that I want to make on this video, which is I am going to have a sponsored video going up in the next couple of days where I talk about an electric vehicle related company. So I'm really excited. I've worked really hard to get in this opportunity. It's something that I'm extremely grateful for, and I hope you guys find value in that video when I release it in the next few days. So I just want to say that's the big announcement, and I'm going to post that in the Discord below. But make sure you check the links in the description where you can find the link to the Discord, check out Robinhood for free stocks. My CBD company and my music are down there as well. So let's get right into this video. So the cool thing about playing Tesla, right, is it gives out some really great premium as far as individual stocks go, as far as even compared to the ETF plays. Now this is something I want to continue to incorporate into my ETF spreads, is to play Tesla, you know, almost every week now. Of course, if there's like a major catalyst or something, I won't, but Tesla's been really strong as a stock over the last year, as you guys can see here. But just in general, I mean, so if we scroll down, you guys know this is my shares position, 42% of my long-term portfolio. But if we scroll down, here's kind of what I'm working with, and I'll show you guys step by step. But currently I have $5 grand of collateral that I'm rolling with in Tesla. I'm already up $183 in total return, and I'm shooting for another $375. Now, I don't know if I'm gonna hold 100% of this. I would definitely close some of these contracts before expiration going into after hours on Friday. Of course, unless Tesla's up like to 900 by then, right? But if we look at Tesla here, let's go to some of my specific spreads so we can get more in depth on why I took the ones I did, so you guys can kind of look at it and see if this fits your style as well. So let's take a dive into my first position, which is Tesla 735, 730 puts. This is a credit spread where I put up $500 worth of collateral, as you guys can see here, to make 55, which is a fantastic 11% return on your money in a week and a half. So I'm really excited because this is already at 72% realized. I have 15 more dollars to go, and I currently have about $82 to $83 worth of runway from my strikes, to where then I'd be in the money and at risk of losing all my collateral. So I played this position small because I picked it up on Wednesday when Tesla dipped to about 808. So I'm really excited about this position specifically. I played this one small, but I think putting up 500 to make 55, the nice little 11% return on your money, is something that's so awesome in a week and a half. It's really hard to beat that. So I thought, what's 500? I'll throw it at it. I'm not gonna go too crazy into this position. As I was adding on a day that Tesla dipped, and it could dip more on Thursday. It went sideways, picked back up on Friday. Now this is my bigger position, as you guys can see here. This rose to 110. This is my 750, 745 put. So I bought a lot of these on the 10th. My average credit is 56, and I put up 500 per play. So with the average credit around 56, we're looking at another really solid return of just over 11%, and to be specific, 11.2%. I'm currently up $143 with $360 left to be made. And you guys know my goal is 500 a week off the market. So even though I entered these this week and I appreciated that much already, if I can gain the 360 from this position and the 15 from the other one, that would be 375, and realize gains by next Friday. And then I can just pick up other ETFs with the remaining collateral I have to make that $500. If we scroll up here, as you guys can see, throughout the day I was kind of nervous because I was negative on my position until about 245, right around here where the premiums were jumping around the 60s to 50s range, and at the end of the day ended at the 40 range. So this is one of my bigger positions where I am in with $4,500 since I have 9 contracts with a $5 spread. So in with 4,500 is perfect for me personally, to where I'm not super emotional with it. I know what I can handle, and I like playing that game where it's, you know, how much can I put into a stock before I start to get emotional, because, you know, it's like you're getting out of your comfort zone. And I think that's fantastic for if you want to scale your account a little bit quicker, is to push yourself slowly, right? To know, like, if you're getting nervous because Tesla's falling, hey, you went in with too much money. Now I'm comfortable going in with 5,000 of collateral, but if I was in with 10 or 15,000, I would be one nervous dude who Probably wouldn't be sleeping at all even this weekend, but since I'm in with 5K, which is what I'm comfortable with, and I'm diversified in other ETF spreads, I know that if I do take a loss on Tesla, I can just roll those into different contracts or roll them into ETF plays where I have safer, more of a high probability amount of making my money on spreads for the week. If we take a look at the individual leg of this position, as you guys can see, this is the individual 750 put that I sold, and you guys know I bought the 745 against it. So if we look at this, the Greeks over here, you can see that the delta is 12, the theta is 94, and I get the theta every day just from the contract decaying. So that's really nice, is I have a full dollar basically on this contract that will get chipped away just by theta decay. So when we open up on Tuesday, when we open up on Wednesday, Thursday, we will have a dollar being chunked out of it just because of time, right? Whether Tesla goes up, down, or sideways, it is getting chunked out of it every single day. And that's the one thing I really like about Tesla, is even though on paper it can get scary, right? Because this put went from 1,300 down to 400 on the day, because it's very volatile. And it looks like, right, that I'm up $3,600, but you gotta remember I bought the puts against it. So that's where that spread money comes in, right? Because this would be extremely expensive to just sell puts. So let's hop into the option chain specifically on Tesla, and we can look at further out positions. So I'll tell you guys ones that I'm looking at and I like the collateral to credit ratio on. But let's first talk about the 19th, because those are the positions that I currently have, which if we go down to mine, you can see right here I have an 87.06% chance of profit on my 750 745s, and on my 735 730 I right here have a 90% chance of profit. So even there you guys could grab a position, you know, with an 87% chance of profit. You put up 500 to make 40 credit, because that's the spread right here. That's still 8% in a week. That's phenomenal. Now you do have a lot of runway still on Tesla, which is really nice. You're looking at about $70 worth of runway there. And Tesla can move a ton in a day, as you guys know. I mean, this is a stock that potentially could move $100 in a day, even on like a really bad red day where Tesla sells off for whatever reason, right? Maybe people are getting scared because they bought at the top. There's many reasons that a sell-off can happen. Institutional selling, right? Kimball Musk sold shares this week, so that could have caused the drop on Wednesday from other investors seeing that he sold shares, so we should sell our shares too. So let's hop over to February 26th, and then maybe we look at March 5th, but we'll see. So let's say we scroll down to getting a high percent chance of profit. So if we look here, right, we have the 710, 705. Now this is for February 26th. So if I was to sell this put and purchase a 705, I'd put up $500 worth of collateral to collect $42 or even $43, like it just updated. So I'd be receiving a credit. I'm not recommending that you guys do this specific position, but as you guys can see, you would put up 500 in collateral to make 43 by the 26th. Now, of course, the market's gonna open this coming week after President's Day. So if you were to pick up this position, you would have roughly $110 worth of runway. Now this is if you think Tesla is gonna go up in share price. And now if it drops, you could potentially lose value. So that's what's really important, I think, when you're entering positions, is to enter with around $100 worth of runway, because Tesla is so volatile. And one thing I wanna touch on in my specific position here, the one that I'm rolling that's at 28% return, 750 put, 745. You gotta remember, when I entered this position, Tesla was 845. And with them dipping really hard on Wednesday, that really caused the premiums to inflate. So even though it looked like on paper that I was down $1,000, I have made all of those losses back because they were all unrealized. So it's very common for you to take a Tesla position, and if the price action goes negative, you will lose money, and it will look substantial based on how much collateral you are in with, right? So that's the one thing you gotta take into consideration. But if you have a long-term mindset like I do, where I look at how can my account make 4 to 5 to 6% a week, and seeing Tesla here, this position 11.2% over just 2 weeks of holding, that's exactly what I'm looking for. So I went a little bit bigger in. Yes, Tesla did fall $40 pretty much after I entered, the day after, 2 days after, but it's still bullish now. Friday was crazy, and we will have to see where we open at on Tuesday. And then I'm gonna show you guys my portfolio real quick. So if we go to my portfolio currently, we're sitting at $41,911. Now I did just move $1,000 into this. risk so that I could have more money to play around with cash secured puts. So if you guys look here, I ended the day almost at 42 grand, but if we scroll back to where Tesla dipped the biggest in the morning, my portfolio was down almost 1,000 on the day. I was down to 40,627. But you have to realize that that's unrealized losses. And of course I have other things like my Tesla shares equate for some of that, and so do a lot of my other shares. Like Zoom had dipped in the morning, and that's one of my big positions currently, and it proceeded to rise at the end of the day, and we had a lot of nice movement at the end of the day to where you can see my portfolio from 320 to 350 gained roughly $500 to $600. So that's what's really nice, and something you have to take into consideration when playing these Tesla spreads is my chart looks just like the Tesla chart. Because I have long-term shares, I have the spreads going. Yep, I'm down on the week 500, but that's between shares falling from when it went from 850 down to 800, and now it's on the rise, as you guys can see here. And as theta decays more, and if Tesla shares run back up to where they were, I should be even higher than 42,200. That's what's really nice about building your portfolio this way, is it may look like you're red even on the week, but next week, this portfolio could push $43,000. If Tesla is bullish, the theta decays my contracts, I grab a couple more ETFs, and it's such a fantastic way to grow your account slowly with compound interest. That's gonna be everything for me in this video. Please be very cautious when you're playing Tesla just because there's so much potential movement on it, as you guys know, and I would hate for you to wipe out all of your collateral because you only went $30 from the current strike price, or only went 10 or 20, because this stock does not move like an ETF at all. So if you're someone who's used to trading credit spreads on ETFs, this is a whole different ball game, and I just really think you guys should know that ahead of time. And I hope everything I showed you in this video explained everything very well. And I'm really excited for the future of us. I'm super excited for the sponsored video that's coming up, and I'm really excited to have you guys along for the ride with the community. So make sure you leave a like and subscribe. I will see you guys in the next video. Have a fantastic weekend, everybody.